Hello everyone, welcome to Real Estate Daily with the House Heroes. Today we got some cool stuff on tap for you. Foreclosures are taking off and mortgage rates will probably get to the moon before NASA can get Artemis there. So thank you guys for joining us. I'm Ryan Leneker. Here is where we go over the latest news in housing, real estate, and mortgage. If you enjoy these updates, make sure you hit the like button and smash the subscribe button and go in and actually turn your notifications on so you get notified when we do post a new video. Today is Thursday, September 8th, I believe. I haven't been writing too many contracts in the last day, apparently. Anyways, let's jump into it. One of the biggest news articles that has come through, we have people asking us all the time, where are foreclosures? We hear they're going up. And for the longest time, they really weren't moving much at all. We are bouncing off all-time lows of foreclosures. You know, we were pretty low going into COVID. And then with COVID, obviously, there was a ton of foreclosure moratoriums and things in place. So most banks did not foreclose or could not foreclose. Banks, servicers, non-bank lenders, all of the mix. But data is starting to come out. Here, this report's from Adam through DS News, which is default servicing news, I think. Nationwide foreclosures start to hit pre-pandemic levels. So we're bouncing off the all-time lows, getting back to a normal low, let's call it. What's interesting in some of these numbers here is repos have gone up 14% from a month ago and 118% from a year ago. Some of the highest foreclosure rates right now are in Illinois, Delaware, and South Carolina. The largest by numbers, because they're higher population centers, are also Illinois, New York, Michigan, Pennsylvania, and California. So we might actually see some foreclosure inventory coming up here. I know that I actually put in an offer for a client on a foreclosed home today, using yesterday's date apparently of 9/7. But as we kind of get more down to a granular level, here are some of the numbers. So Cook County, Illinois, 798 foreclosure starts. Now, you got to note that not all foreclosure starts are going to end in foreclosure. That's where somebody has missed their payment roughly for 30 days. Sometimes banks wait a little bit longer before they actually file the notice of default. And they work with that homeowner, that borrower, to try and find a workout, either to sell it because most of these people have equity, to do a short sale if they don't have equity, or do a deed in lieu of foreclosure. So the biggest thing out there is if you guys know somebody who's in default and is having problems, make sure you get them some help. There are a lot of nonprofits out there that can help go through their options, but it comes down to, if you see something, say something, right? Because you're going to see somebody who's in a hard position and you probably think they got it handled. Most of the time they don't. They're sticking their head in the sand. They're not opening their mail, and there are avenues out there where they can walk away from money even if they are upside down on the home. A lot of times the bank will give them cash for keys, maybe even give them an incentive to walk away from the home. And that's the best way to go about it, really. So jumping into our local market, we got LA County with 740 foreclosure starts. You got Texas with 464 there in Harris County, Suffolk County, New York, 300 roughly foreclosure starts, and Riverside County, California, 280 foreclosure starts. So if you guys are looking at any of those markets, make sure you get with your agent, set up some searches for default property. It's probably going to take some time before these make it through. You got to remember, once that notice of default is filed, it takes 30 days of being late before they can file it. They normally take longer. Then they have to wait 90 days before they can file the notice of trustee sale. And then after that 90 days, they normally have to publish it for 3 weeks in the paper, that sale date. So you're looking at another 21 days. Anywhere in longs there, if somebody, tries to do a short sale or contacts a bank and lets them know that their property is actually listed for sale, the bank will normally push out those sales dates and give them an extension. So make sure, if you know anybody who's got any problems, or if you're having problems, DM us, send us a message. We will get you to the powers that be to get you some help. Most of the time, the best avenue is to sell this home, especially since most people have equity right now, or by doing a short sale. In the long term, it's going to look better in your credit, and you can, again, stay in the home a lot of times longer while it's going through the sale process and normally get cash for keys on the back side of it. So that's always one of the two preferred methods, is to stay in there longer and get the most money that you possibly get. And we are professionals at doing that, and we can help you with it. So if you guys are even agents out there and you've got a client in that position and you're looking for help, just agent to agent, we can help you walk that as well. Next, we've got some mortgage rates. These are the ones sending people to the moon before NASA can right here. So mortgage rates are launching towards 6% again. New, and they're saying the highest level since 08. I feel like we kind of peaked out around 6.25 there a couple months ago. They're looking at 30-year fixed rate mortgage averaging 5.89% as of September 8th today. And a year ago, we know back in the good old days, 30-year fixed was 2.88. And week over week, it's been up roughly 23 basis points. So if you guys are out there shopping for a mortgage, what we're seeing right now is with these increased rates, the disparity from lender to lender is it's got a bigger gap. So you want to make sure you're going in and getting a second opinion on any mortgage you've got. The stats are, and it's quoted here again, if you quote your current loan out against one other lender, you're normally saving it about $1,500. And if you quote 2 or more lenders, you're saving on average $3,000, because you're letting them compete for your business. If you guys want to know what lenders we are seeing give people the best rates right now, feel free again to DM us or message us, and we'll get you with them to get quotes. Get you 2 or 3 of them. You guys can get some quotes. And also, if you guys are getting turned down, you're being told that somebody can't do your loan, there are a lot of niche products out there, from bridge loans if you currently own one and are worried about sell one to buy. We've got bridge loans, we've got private money loans, we've got bank statement programs. We have a lot of lenders we work with that have these programs. When I say we, I'm not a lender, but we can get you with a lot of our lending partners that we've worked with in the past that have treated our clients very well and got them great deals and have good loan programs that we trust, and we can get you those quotes. So and home prices are falling for the first time since 2020. I'd say it's the second time, because we saw them falling probably end of May into June, and then they stabilized a bit, and actually even in a few areas went back up there for a hot minute. And now with rates going back up into the 6 range, we're starting to see some prices fall again. We are also starting to see homes fall out of escrow. So if you guys are out there, you see a home you like, and you're the bridesmaid, not the bride, you're the runner-up, make sure you let that agent know, hey, we're still interested if something were to fall through on it. We are seeing buyers be a lot more timid when the inspection reports come out now, and they're asking for a greater amount of repairs. Some sellers have not seen the market shift yet, and so a lot of times what they're doing is they're not being as they're not being as generous as they probably should be with some of the repairs and credits. And so we're starting to see some fallouts from property condition that we wouldn't have seen last year, we wouldn't have even seen last month when rates were a little bit lower, because the buyers are feeling it from all ends now. And so with the higher rate, they're not going to have that extra disposable monthly income with that higher payment to do some of the repairs. So if you guys are a seller out there, you definitely need to, I would say, get a termite report up front so you know what the termite work might entail to get clearance, because a lot of buyers are asking for that right now. Especially we're seeing a higher percentage of FHA and VA buyers out there. These are the ones that couldn't get their homes, their offers accepted before, and now they can, and those are great 100% financing products. All VA requires termite repairs to be done and clearance, and a lot of FHA, if there's work that looks like it's obvious, then a lot of times that appraiser might call it out, and then the lender will require it. So we're advising all our sellers to get a termite inspection up front just to be ready, so you know what that dollar amount might be should you have one of those offers come in and then they request it. So And we're also even advising some of our sellers now to do their own home inspection up front, just so they're not shocked with what the buyer might ask. And then also what they can do is they can provide those 2 reports to the buyers that are seeing the property. So there's less likelihood, if they've got multiple offers, that they accept one and then it falls out. Because every time that home falls out, it is a ding on that property and it stigmatizes it. So right now, the name of the game is don't let your property fall out of escrow. You got to be a little more generous on your repairs, and you want to do as much upfront legwork as possible. Give that information to the buyer so you don't have a fallout, because it doesn't look good. And each time a property's falling out right now, as rates are going up, the sellers are taking less. So that is absolutely a pro tip as we're starting to see prices being reduced. You know, if you want to make sure you're getting top dollar, do the upfront work. So next, Goldman Sachs expects home prices will fall in 39% of US cities next year. They got a little graph here. You're seeing some of the big cities, LA down to roughly 3%, Inland Empire down roughly 4%, San Diego about 2%. Most of the big metros, except for St. Louis, Philadelphia, New York, and DC, because a lot of those had pretty big hits already. I feel like they didn't really go up as much over the last 2 years. That they still have some appreciation, but most of the West is looking like it's going to have cuts. And then in Boise, for example, nearly 70% of homes for sale had a price drop in July. You got to remember, a lot of that was funny money rolling out of California. If California is slowing down, the exodus in those other Western states, you know, a lot of the, you know, work from home and work remotely type jobs that we're able to transfer, that story has absolutely played out, and now we're starting to see it cool off a bit. So another one we've got rolling in is no sign of a rebound for mortgage applications. We're definitely seeing less mortgage applications on refis. I mean, they're almost non-existent. There are still some people looking to do cash out, or, you know, especially if they're going to cash out and go buy a rental. Those numbers are down. You know, you're not going to be refining most of the loans out there. What we are seeing in place of those are home equity lines of credit, because if you've got that 2.75 rate and you want a little cash, maybe to go buy a house, go streamline some of your other debts that are higher rate, it makes more sense to do a home equity line of credit. So we're seeing more of that, and the actual mortgage application business is more purchase money business. It's like roughly 99% at this point in time. And what's interesting about that is we are also seeing, I talk to a lot of buyers that are looking to buy a house and they're just having problems with inventory. Inventory is still at all-time lows, and because of that, they're not willing to apply until they start to see some homes come on the market that they're interested in. So it's going to keep those numbers low and stay low for quite some time, especially as rates high. And then just a quick reminder, you know, it's been in the headlines. B of A came out with their 100% financing product, only in test markets, Dallas, LA. They're redlining it into predominantly Hispanic and Black markets. So it's not necessarily that you need to be Hispanic or Black, but it needs to be in a community that's predominantly Hispanic or Black. And it'll be very interesting to see. I think the program was 100% financing, no mortgage insurance, possibly some down help with closing costs or no closing costs. And it seems like it's going to be a very small rollout test market. But remember, there's other loans out there, USDA loans, and some of the high desert around here, they're considered rural and actually qualify for USDA loans. You know, originally that was more towards farmers, but if you're in an area where it's around acreage, like the high desert, the low desert, and some of, you know, Temecula Valley and stuff like that, where you still got vineyards and Fallbrook and stuff, you can get some USDA loans. VA loans, right? So if you're in the armed forces and you've got your certificate, you can do VA loan. That's a fantastic product. I highly advise using it. And then there's FHA down payment assistance programs where you can get 100% financing, and you can even finance a closing cost. I've got a client that's getting approved for that right now, and we've been successfully able to get those offers accepted. So where a year ago you couldn't even get that offer accepted because things were selling for more than they were appraised for, now things are actually selling for at or less than their appraised value in most instances. And because of that, you can easily work in closing costs coming back from the seller. And a lot of times you don't even need as much of the closing costs from the lender on these programs, and sellers will gladly take this loan. But the key is to get with the lender now, get that application rolling, and so you can be approved, and that way that the second that home pops up that you like, you'll be in a position to get it. So again, rounding out the optimal blue numbers, I think these are always rolling a day late. This one's September 7th. They were showing the 30-year conforming loan at 5.95% and the 15-year conforming at 5.4. Jumbo is still doing really well there at 5.5. And again, there's a lot of disparity in these numbers from lender to lender. So make sure you get with multiple lenders and see who can do the best for you. We're still seeing a lot of the non-bank lenders do the best. So a bank lender is a Wells Fargo, B of A, Chase. Non-bank lender, you're looking at UWM, right? So United Wholesale Mortgage, the Quickens, the Loan Depots and things like that. So Synergies, stuff like that out there. So and also independent brokers. So if you guys like our content, please hit the like button, and again, like I said before, subscribe and make sure to hit the notifications on so you get the alert when we go live. We'd really appreciate it. Every time we get a like, it just helps get and push our program out there to more people who we feel could use it. And so if you feel the same, please hit the like and even share this video if you know anybody that's looking to buy or sell a home in the next 90 days so they can get brought up to speed on what's going on in the market. So that's it for today. Thank you for joining us. Again, we really appreciate it. Take care.